So let's get you caught up on staked Ethereum. What is it? What do you need to know about it? And this is coming from CNBC. So hopefully it's kind of taking it all down to the very base level to give you guys the best, most easiest descriptor to understand. Staked Ether, or steth, is a token that's meant to be worth the same as Ether. For the past few weeks, it has been trading at a widening discount to the second biggest cryptocurrency. Instability in the token's price has further constrained liquidity in fragile crypto markets. Another controversial cryptocurrency is causing havoc in the digital asset market, and this time it's not a stablecoin. Staked Ether, or steth, is a token that's supposed to be worth the same as Ether. But for the past few weeks, it has been trading at a widening discount to the second biggest cryptocurrency, fanning the flames of liquidity crisis in the crypto market. On Friday, steth fell as low as 0.92 ETH, implying an 8% discount to Ether. Here's everything you need to know about steth and why it has crypto investors worried. Each steth token represents a unit of Ether that has been staked or deposited in what's called the beacon chain. Ethereum, the network underpinning Ether, is the process of upgrading to a new version that's meant to be faster and cheaper to use. The beacon chain is a testing environment for this upgrade. Staking is a practice where investors lock up their tokens for a period of time to contribute to the security of a crypto network. In return, they receive rewards in the form of interest-like yields. The mechanism behind this is known as proof of stake. It's different from proof of work or mining, which requires lots of computing power and energy. I like how that is framed, but obviously we've determined that that is not always the case. Also, I want to bring something up that's very interesting. Do you guys see the correlation? So the correlation that I wanted to bring up as far as all that goes is that when we talk about proof of stake and like the issues that it may potentially have, we can point towards the CeFi market or just the DeFi market in general and things like Solana to show that what you essentially have is the same problems as they correlate to proof of stake. And really, proof of work does appear to be the only thing that maintains security, transparency, etc. Once you move out of that, you turn into basically something that allows for over-the-counter trades, more manipulation, and so on. So let's get into finishing this. Staking is a practice where investors lock up their tokens for a period of time to contribute to the security. There we go. Interest-like yields. Obviously, that's what we're talking about with CeFi and DeFi. The mechanism behind this is known as proof of stake. It's different from proof of work or mining. And then it talks about, obviously, the energy use. To stake on Ethereum, currently users have to agree to lock away a minimum of 32 ETH until after the network upgrades to a new standard known as Ethereum 2.0. However, a platform called Lido Finance lets users stake any amount of Ether and receive a derivative token called steth, which can be traded or lent on other platforms. It is an important part of decentralized finance, which aims to replicate financial services like lending and insurance using blockchain technology. steth isn't a stablecoin like Tether or Terra USD, the algorithmic stablecoin that collapsed last month under the strain of a bank run. It's more like an IOU, the idea being that steth holders can redeem their tokens for an equivalent amount of Ether once the upgrade completes. When the Terra stablecoin project imploded, steth's price began trading below Ether's as investors raced for the exit. A month later, crypto lender Celsius started halting account withdrawals, which saw steth value dropping even further. Celsius acts a lot like a bank, taking users' crypto and lending it to other institutions to generate a return on deposits. We talked about this with BlockFi. The firm took users' Ether and staked it through Lido to boost its profits. Celsius has more than $400 million in steth deposits, according to data from DeFi analytics site 8board. The fear now is that Celsius will have to sell its staked ETH or steth, resulting in hefty losses and putting more downward pressure on the token. But that's easier said than done. steth holders won't be able to redeem their tokens for Ether until 6 to 12 months after an event known as the merge, which will complete Ethereum's transition from proof of work to proof of stake. That's sort of true, because remember, you can go to the platform and you could swap it for Ethereum. Problem being is that right now, as far as liquidity pools go, you have 80% of it filled up with stETH and only 20% of it filled up for ETH. Another thing that we have to talk about here is that post-merge, there is no actual withdrawal function. So because stETH is paired or a representation specifically of Ethereum that's been staked, the actual factor of which this gets all resolved is when basically you are able to unstake ETH, which is the actual problem that we're seeing here. And that won't be resolved by the merge, to be clear. And that's something that a lot of these big publications miss. This comes at a price, as it means that investors are stuck with their stETH unless they choose to sell it on other platforms. One way to do this is to convert stETH to Ether using Curve, right? A service that pulls together funds to enable faster trading in and out of the tokens. Curve's liquidity pool for switching between stETH and Ether has become quite unbalanced, said Ryan Shea, economist at crypto investment firm Trax.io. Ether accounts for less than 20% of the reserves in the pool, like we just mentioned, meaning that there wouldn't be enough liquidity to meet every stETH withdrawal. Staked Ether issued by Lido is backed 1-to-1 with ETH staking deposits, Lido said in a tweet last week, attempting to calm investors' fears over stETH's growing divergence from the value of Ether. Staked Ether issued by Lido is backed 1-to-1 with ETH staking deposits. The exchange rate between stETH and ETH does not reflect the underlying backing of your staked ETH, but rather a fluctuating secondary market price. Quote, the exchange rate between stETH and ETH does not reflect the underlying backing of your staked ETH, like we just said. Like many facets of crypto, stETH has been caught up in a whirlwind of negative news affecting the sector. Higher interest rates from the Federal Reserve have triggered a flight to safer, more liquid assets, which has in turn led to liquidity issues at major firms in the space. Another company with exposure to stETH is Three Arrows Capital, the crypto hedge fund, which is rumored to be in financial trouble. Public blockchain records show that 3AC has been actively selling its stETH holdings, and 3AC co-founder Zhu Su has previously said his firm is considering asset sales and rescue by another firm to avoid collapse, and that would be an over-the-counter trade, right? 3AC was not able to comment when contacted by CNBC. Investors worry that fall in stETH's value will hit even more players in crypto. Quote, in crypto, there is no central bank, Shea said. Things will just have to play out, and it will continue to weigh on crypto asset prices, compounding the negative impact from the macro backdrop. And that's a fair point. Bitcoin briefly sank below to $18,000 a coin on Saturday, pushing deeper into 18-month lows. It's since recovered back to 20,000, and Ether at one point dropped below 900 before retaking 1,100 now, by the way, on Monday. The stETH debacle has also led to fresh concerns over the security of Ethereum. About a third of all Ether locked into Ethereum's beacon chain is staked through Lido. Some investors worry this may give a single player too much control over the upgraded Ethereum network. It does. Oh, it does. Ethereum recently completed a dress rehearsal for its much anticipated merge. The success of the event bodes well for Ethereum's upgrade, with investors expecting it to take place as early as August. And we know, just to clarify on that we're looking at September at the earliest here, just to be clear. That's been changed. But there's no telling when it will happen. It's already been delayed numerous times. The latest updates on Ethereum's testnets have been positive, which brings more confidence to those waiting on the merge, said Mark Ajun, research associate at crypto asset management firm CoinShares. So when withdrawals are eventually enabled, which by the way is not from the merge, because we've confirmed that via the roadmap written by Tim Biko. Stop. Any discount in stETH will likely be arbitraged away, but until that unknown date arrives, there will still exist some from form of discount. So there you go. Once again, I want to make it clear that this isn't resolved until withdrawals are unlocked, and withdrawals will not be unlocked with the merge per the roadmap. So it's very frustrating. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.